One fund, on point for today, the expert to talk about it. This is the ETF of the week. Welcome to the ETF of the week, where we get the latest take from Todd Rosenbluth, the head of research at VettaFi. And if you go to VettaFi.com, you will find all the tools you need to be a savvier, smarter ETF investor and to get more details on the new, newsworthy, trending, and timely ETFs that we talk about here. Todd Rosenbluth, it's great to chat with you again.
It's great to be with you again, Chuck. How are you?
I'm well, and I have a question for you. Your ETF of the week is
the PIMCO Active Bond ETF, ticker BOND.
The PIMCO Active Bond ETF, ticker BOND, the original active bond ETF. You know, normally they say that active bond ETFs do better when rates are going up. So why this ETF now?
Well, we think active bond ETFs can do well in both a rising and a falling rate environment, in part because of that uncertainty. That uncertainty that we're currently in, there's expectations that the Fed is going to cut interest rates at some point during the next few months, maybe once, maybe twice. The maybe is the part why I want to turn to an active manager, and certainly PIMCO has the experience, the broad team, the expertise to help us sort through how to position a portfolio heading into the rest of the year. So that's why BOND is my spotlight this week.
Now, it's interesting the timing of this pick because, of course, in my other job, I'm a columnist at MarketWatch, and my MarketWatch colleague, Mark Hulbert, well, he wrote a piece this past weekend that was looking at active bond ETFs, and he basically said you can justify owning them, but if your justification is that they do better during rising rate environments, that classic argument, they don't, and they don't do better in falling rate environments either. So why go with an active ETF as opposed to going with the more sure thing of an indexed ETF?
So it's hard for active management to outperform an index, whether that's the equity markets, that's the fixed income markets. But this ETF from PIMCO actually is outperforming. When I was looking at Morningstar data before we recorded this, BOND was outperforming on a 1 year, on a 3 year, on a 5 year, and on a 10-year basis, the category that it's compared to, as well as the index. Now, it won't always, and it won't continue to do so every time period. But we like the flexibility of an active manager. We think if you're going to go with an active manager, you have to have confidence in their expertise in how they're building a portfolio, and you need to understand how it's being positioned. And what we like is that BOND, they're taking on a little, or they were taking on a little bit less interest rate risk. So they weren't necessarily playing the Fed's next move, although they have that flexibility. But where they were adding value was through taking on credit risk within the investment grade category and being able to look internationally. That's one of the flexibilities that this and some of the other bond ETFs, active bond ETFs, offer. So that's why we think now is a good time to take a closer look at BOND.
Because this is a go anywhere fund with the kind of flexibility you talk about, you can have this fund and have it be your bond portion of your portfolio. I mean, you can make this not just a core, but the position. Do you suggest that some investors might want to do that? Or, you know, obviously you're in the business of doing ETF research and you research a lot of bond ETFs. I know you don't want to throw away all the research here, but for somebody who's trying to keep it simple, stupid, is this your bond ETF? If you're saying, I need to get bonds, I don't have any, and this will do everything for me?
So this fund, it could very well be the core of your fixed income allocation, and perhaps you want to augment that by taking on additional credit risk and adding a little bit more income. This is going to focus on the investment grade space, so that's why it makes sense for a core area of the marketplace and has that flexibility. We certainly find that some advisors are combining active and index-based strategies, owning an iShares or a Vanguard low-cost index-based product and pairing that with an actively managed ETF from PIMCO, because bonds are different. And you're certainly going to get the benefits of the active management landscape and the tools that are available using this PIMCO product. But you might also want to pair that with a lower cost index-based product. And I know we're probably only going to get a couple more questions in. Boy, you got to love the ticker, BOND. It's hard. I'm intentionally spelling it out each time for you in the audience because the word bond just rolls off the tongue as we're talking about the fixed income marketplace. And that ticker, BOND, showcases why this can be a core part of a portfolio.
It does roll off the tongue.
Bond. James Bond.
But it is not a secret agent in your portfolio. In fact, it is the biggest, kind of best known active fund. It was, of course, Bill Gross's fund when Bill was at PIMCO. And of course, they haven't missed a beat when you look at how the fund did after he left. In fact, his performance far worse than the performance of his former managers at PIMCO. But since we are talking about active, I am curious, how deep is the pool of active managers that you would use on the bond side of things? I mean, this is the best known, but are there a lot of active managers? To your point, this one might be worth it. To Mark Hulbert's point, they're not worth it. Are there a lot of active managers in the bond space, or generally in the bond space, do you prefer active management to passive?
So let me just first name David Braun is the lead portfolio manager for this fund. We at VettaFi have done some educational content with him, and he's top notch. We have high confidence in him and his team to build a portfolio that clearly, as you mentioned, it has worked. We think it will continue to add value for advisors and end investors. But the space is certainly getting more crowded. We've seen a growing number of large asset managers enter into the ETF marketplace. They have their capabilities and strengths, and they can bring that now into the ETF marketplace and make that easier for investors to access the tax efficiency, the liquidity benefits that come with an active ETF. But those newer funds don't have that 10-year track record that the ticker BOND has. So for folks that want to have confidence in how a fund has performed in those up and down, rising interest rate, falling rate environments, you certainly can look at that history with the David Braun run PIMCO Active Bond ETF.
Normally, one of the questions I ask you is how this fits into a portfolio. And of course, lots of people will have bond funds. This is a core bond fund. In terms of if someone wants to take your advice and add it to a portfolio, if somebody's already got an active bond ETF and it's not this one, do you want to add it together? Because, you know, in the stock side of things, if you have a bunch of funds in the same space, you have a closet index fund. But in the bond space, it's even more homogenous. So is this only an ad for people who either have no bond exposure or their core bond fund is an index fund?
So you probably don't want to have too many active funds that are in the same investment style. But it's important to take advantage of looking inside the portfolio, see how a fund is positioned, get the benefits of that skill set and that expertise. And it matters if the active bond fund that you've chosen, whether that's a mutual fund or an ETF, is not keeping up with the broader benchmark, let alone outperforming it, you might want to replace it, or you might want to pair it with another fund to diversify away the risk of an individual management team. So this is a good fund. I think it can fit into lots of different scenario portfolios.
It's Bond. PIMCO Bond, PIMCO Active Bond ETF. It's the ETF of the week from Todd Rosenbluth, the head of research at VettaFi. Todd, always a pleasure. We'll talk to you again next week.
I'll see you next time, Chuck.
The ETF of the week is a joint production of VettaFi and Moneylife with Chuck Jaffe. And yes, that's me. You can learn all about my hour-long weekday show by going to your favorite podcast app or by going to MoneyLifeShow.com. By the way, if you're searching for great information on exchange-traded funds, look no further than VettaFi.com, where they have all the tools you need to be a better investor. They're on Twitter at Vetta_Fi. And Todd Rosenbluth, their head of research, my guest, he's on X as well. He's at Todd Rosenbluth. The ETF of the week is here for you every Thursday. We'll see you again next week. And until then, happy investing, everybody.